Microphone check 1. Microphone check 2. Good morning, everybody. Welcome to the Forex.Today YouTube community. Thank you for being a subscriber. If you're new, please subscribe. Also, please like, please comment on all the videos. Tell YouTube this is quality content. In the meantime, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So good morning to you. How you doing? How you feeling? It's Thursday, lots going on. The ECB is doing something or doing nothing, which is something. So we'll see how the market reacts to Christine Lagarde. We'll also check the markets. We'll check dollar pairs, yen pairs, Swissy pairs, gold, oil, Bitcoin, whatever you want. You're the boss. I'm happy to help. I'll cover what you need. Just please like, please comment. Also, you probably should take notes. Nice, right? Tomorrow is May, so today is the last day of April. The best stock market month since 1974, wasn't it? The best month since 1974. Very cool, right? So there's the dichotomy we were talking about back in March, the difference between the economy and the market. And we trade the market. Okay? So very interesting. I'd like to thank Traders Way for being the sponsor of our community. Thank you, Traders Way. They do that because they would like the opportunity to earn your loyalty and respect as a foreign exchange broker. So you're a trader. Why don't you swing by Traders Way? Give them an opportunity. Open up a demo account, play some trades on MT4, check out the execution speed, check out the swaps, check out the spreads. Everything's favorable, good customer service. You can have MT4, you can have MT5, you can have a fixed spread account, you can have a variable spread account, you can have an ECN account. Come on, man. Traders Way rolls out the red carpet for you. Swing on by, huh? And here we are. This is where we left off yesterday. Sorry, my voice is a little thin after 7 hours or 6 hours of webinars yesterday. Cindy says, hey, I watched the replay yesterday. Very motivation was powerful. Cool. Right on. I preach to teach because some of you never had this. Right? Your friend can be your, right? Your enemy can be your friend or guardian. All right. So, very cool. So here's where we left off. I'm still risk on. Same 3 stupid trades. 1,000 pips now, though. 1,000 pips for the week. Snap. Huh? Knuckles? Do you want to do a belly bump? All right, we'll just keep it knuckles, right? Boom! 1,000 pips for the week. Cool. Nice! Just simply risk on. That's all. So the thing is, you have your bias. I know we do it every day, but I have to say it. You have your bias. Bias is your outlook for global macroeconomic conditions and really the market, global market conditions. Do people want to take on risk? Well, when they want to take on risk, the markets rally. Okay? Do you use hedging in your trading like with options and futures and stuff? No, but you would use Forex to hedge. Okay? So if you're worried about, so typically what it is, so like a friend of mine in Atlanta, he does something like $6 or $7 billion worth of trade every year. And he does business in many countries, like something like 17 different countries. And so he does a lot, he owns a hedge firm in Switzerland, but he does a lot of business in the UK and throughout Europe, throughout the Caribbean, stuff like that. And so he has to hedge all these contracts, and he does a lot of trade with Asia and stuff. So So the bottom line is, if you are receiving money in the future, like a contract, so he'll sell something, they're like, okay, we need that thing in 3 months. Well, he has to build that thing. So his thing, by the way, is protein, chicken. So they're like, we need a bunch of chicken. We need some chicken breasts in 3 months. Well, he has to like buy the protein, right? He has to go to the slaughterhouses, buy the protein, and put the whole process together. And he actually owns his own port, so he's got to go down and he's got to ship it somewhere and all that kind of stuff. And by the time he delivers it to the customer, it could be weeks, maybe months, depending on the situation, right? Well, what if he's getting paid in euro and the euro loses value in those 3 months? Or what if during those 3 months the dollar changes in such a way that it's not advantageous? So you would have someone to hedge. Okay. So anyways, cool. Let's close this. Okay. Well, gold trying to break out. Interesting. Pay attention to gold. It's trying. It's trying. So we'll come back to gold. Okay. So we had a big conversation in the live trading group yesterday about 70. Oh, is my account fixed variable or ECN? I love variable accounts. I've always had variable accounts. Okay. Yeah, so this price is what we talked about last night, and it was a big part of our conversation. And the thing is, if you're a bull, be a bull. Okay? And understand where the bears are going to challenge you. So I said, if you're going to be a bull, you're buying all these dips. I get that. That's cool. And you can continue to do that. Just don't buy high near this resistance. Just buy low. Buy off the 21, buy off a pivot, buy a roll reversal. But don't buy high. And the risk is bears sell hard at 70 and you lose some money at the top. Well, that's why you're supposed to be buying here or here or here or here or here. You know, and if this one loses, well, it's because, you know, if this is your first trade, you're just late, way late. But the other thing is, I said, if you were a bear had to wait, be patient. And now bears might have their opportunity today or tomorrow, in which case we get a change in direction. And this comes like this. Cool. Now bears get their chance and bulls have to be patient. Good day to you. Hey, Lou. Okay. You see that? You have to know what team you're on, and you have to be patient. Okay? And by patient, I don't mean late. I mean, so for example, if you changed my template here, here, you can even change this up a little bit. Okay, I'll click in. This is an hourly chart. If you're a bull, do you think that's tradable? Gouge us. Thank you, Paulie. That's pretty funny. The thing is, are you waiting and are you looking for this? Are you a bull and do you look through your charts for setups like this? Right? This is what you're supposed to be doing. I think so many people are consumed with having to trade. They're not doing their analysis. You're supposed to be looking for market conditions that fit your bias. So if you're a bull, okay, you're going to keep riding this up forever and ever and ever and ever and ever and ever. But we're also smart enough to think ahead and say, well, if there are bears, they're going to be up in there. Okay? So now if it does this, you should be aware that that's significant. Okay? In fact, that's not what it would do. According to what I see here, it would do this. Okay? But still. But what is your job as a bull? Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Now keep in mind, these green zones print like this is tomorrow's buy zone. We're looking into the future, which is great, right? So it helps. It helps planning when you have an idea what the future is going to be like. Buy, down, 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 buy, up, 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 down, down, buy. Okay, and now here's the challenge. So we were here 5 o'clock last night, and I'm like, well, you can buy the dip and just be cautious near that 70. And if we hit 70 and it collapses, you should probably take a walk. Okay? Joe, do you have the indicator? It's in the day trading course. It's called biased pivots. And if you have it, because you took the day trading course, then you can change it from bullish mode to bearish mode. So a bear would look at it this way and say, I don't want to sell, 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 I don't want to sell. So they wait. Cool. So that's how you do it. Right click, then select indicators, double click bias pivots, and change the mode. Okay, you can also change the time period. So what I do is I change the time period. So now that's monthly. Okay, so here's what it says this month. Buy. There, you're done for the entire month. Congratulations, good trade. Okay. But as far as this, what I do is I would now right click and I hit template, save as, and you can see I have monthly bullish bias pivots. I have swing trading with weekly, right? And whatever. So I can change it and I can say monthly bullish bias pivots. So in fact, I can do that. Let's do that. Template, save template. Okay. I kind of like labeling it like this. So we could bullish bias. Monthly swing, bullish bias. Okay, that's a new template now. So now I can go to indicators, bias pivots, and change it to bearish. So it updates, great. Now right click, template, save template. I'm going to name it the same as the last one. monthly swing, but this time it's a bearish bias. Okay. Okay, cool, right? I'm adding it right now, but I have a bigger project going on with MetaTraders. So the next version of MetaTraders, when you buy, you get into the back office where all your downloads are. So I can say, here's all your downloads. These are like your archive, right? But click this button to install an MT4. Click this button to install an MT5. And it'll just go, it'll start the installation process and go bang, 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 bang. It'll install all like 200 files automatically for you. Okay. So, and in that, I will include these bias pivots. So if you already bought them, it'll be in your download account. Of course not, Joe. But remember, Wyatt's pivots are based off my stuff. Okay. So I have the prior art. The Wyatt pivots are based on my pivot points. So he was an FX boot camper. I invented Fibbits, for example, and Fibbits are in the setting. The colors he chose are my colors, all that kind of stuff. So this is, once again, my idea in the sense that I want you guys to make a choice on what your bias is. Okay? I want you to say, okay, I'm bearish for the month. That's the most important decision you can have, is whether you're a bull or a bear. And those that don't make money usually have no idea if they're a bull or a bear, and that's why they lose money. Okay. So in this case, I ask you to choose, and then I remove all the irrelevant information. All right, so let's go here. Yeah. Cool. So we hit our target. We hit our target. That's the target we had. And I think it's time to take a walk. Not that it can't fall any further, but it doesn't have to fall any further. So if you traded that, that's a beautiful trade. Congratulations. It's textbook. It's exactly what you want. Take the rest of the week off. Right to here, the way a template works to here is it puts in indicators the way you save them. So if you drop the template folder and template file into the template folder, it'll say, okay, well, the template wants to include Wyatt's pivots, for example. But if you don't have Wyatt pivots installed, or you don't have them installed properly, it won't load them because it can't find them, and you will get nothing. Right? So what about a breakout? We have a question here. Well, you're already a bear, right? So you've been in this for a week or two. This is the worst place and the worst price you could possibly pick. So you can't sell this again probably this week. You really should take the rest of the week off. So, but if you had to trade it again, it would be sort of breakout like this. But it's so bad. It's so late. It's so over. Like, I'm not even, but I guess it could do it, right? Oops. I guess it could do it, but this is a counter trend trade. This is a lower high. 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 And this is your exit. I mean, there's just that. I mean, I don't know what more to say. You're supposed to exit. So if I was a bear, I think I would rather see this. The question I have a question here. The difference between in regards to price action between, let's say, a bear taking profit here and a bull taking profit, or a bull entering. Well, price action wise, that wouldn't there wouldn't be a difference, except a bull should be doing stuff like this. But price action wise, there would be no difference. That's why you should do your commitment of traders report. How long do my trades last on average? Somewhere between 3 days and 3 weeks. So I forgot we got the news coming up. Let's prepare for that. We'll probably hit close to 30 million people collecting unemployment. Money for nothing and my pips for free. Yeah, well that's expected, right, Javier? You bought the pivot points thinking it would have the bias? Do I have to access? Do I? Can't. Where? I don't know where it went. Not quite yet, Jimbo. I just answered that 5 minutes ago. Not yet, but soon because I'm creating it. It turns out like 10% of people can't figure out how to install the files properly. So I'm spending time and money having a program do the installation for them. And in those folders is the new bias pivots. So just wait. Okay, so we got a good 6 minutes. You have to remember I have to do it for MT5 as well as MT4. So I paid someone to go through dozens of MT4 indicators and such and convert them for MT5. All right. Money for nothing. Let's take a closer look at gold. Pretty amazing. Finally, maybe playing that. So I would mark it the way I've already marked it, but let's just make it a little clearer. If it's a breakout, she has to go up. That's that. If it drops back below, down to here, it would be very upsetting. Barn it. That ain't working. That's the way to do it. Waiting for weekly jobless claims. Well, I think MT4 is going away, so that would be the biggest one, Liz. I'm old school, so I'm still on MT4. Oh, didn't think about it, Jim. We can talk about it, though. Okay, I'm just waiting. Just waiting. We're getting close. What do you want to watch? Euro dollar, maybe? Everybody loves euro dollar, right? The giant sucking sound of going nowhere. Money for nothing. Can you guys hear that okay?
Welcome to Bloomberg Daybreak. I'm Alex Steele. A couple seconds away from some data in the U.S. as well as Christine Lagarde's press conference for the ECB. Let's take a look here on markets. It's a pressured equity story right now. I do want to point out a headline from Bloomberg saying that Saudi Wealth Fund is building a team to hunt for global bargains. It seems like one more organization sort of getting in to look for those bargains in the market. A lot of hedge funds doing the same thing. In the other areas of the market here, we did wind up seeing a sell-off within BTPs. That's now paired. Some of those losses were pretty much flat on the day. Euro dollar a touch weaker, but nonetheless pretty stable going into this press conference. The data here in the U.S. is out. The number we're all focusing on, though, is initial jobless claims coming in at 3.8 million. Now, that is more than estimated, yet sequentially we're still falling. So if we reach the peak initial employment for jobless claims, that will be a good thing, yet we're still around something like 27 million for those that are unemployed filing for jobless claims. A check-in on inflation, the core PCE deflator on a year-on-year basis, 1.7%, month-on-month down 0.1%, all in line with estimates. And then spending and income,
less bad.
Personal spending down a whopping 7.5%, and personal income is down by about 2%. So both of those
right,
not great,
less
as
bad.
we continue to see the not great data roll in. Bloomberg Michael McKee, economic and policy correspondent, joins me yet again. Mike, is it?
Less
you
bad
mentioned
is
this earlier
good.
when we talked about a euro growth. Is it weird that this data is not weird?
Yes, it's weird that this data is not weird. When you talk about 3,800,000 people filing for unemployment claims in 1 week, that's an astounding number until you compare it to the 7 million we had for a couple of weeks. Your math was a little off. We are almost at 30 million jobs lost, Alex, in just the month.
Well,
of
I thought what she
April,
was doing
appears,
was people might have gotten their jobs back.
March. I suspect a lot of the numbers from this week are catch-up. States that couldn't process all of the applications
30M
today have started to finally catch up, and maybe we'll start to see this decline in the coming weeks. If we don't, it's a real problem. It's also going to be hard to separate out if companies are bringing people back on because of the Paycheck Protection Program. That personal spending number is really interesting. It's even lower than the retail sales number, which suggests a real hit to services spending, which doesn't show up in retail sales. And of course, services spending most of the economy. We know all of the stores were closed, hair salons, nail salons, everything like that. So it really does show the depth of the problem. And these are March numbers.
I want to go
We haven't even started yet in
outside.
No, That's such a fair point. And S&P futures are holding on to their losses, down by about 15 points. NASDAQ futures, though, able to hold on to some of their gains. I'm just going to take a quick check-in here on the dollar. Coming in right now, sort of weaker on the dollar index.
Come on,
It feels like the
Lagarde.
story today is mostly
Christine's
going to be about
taking the
Italy,
mic.
and what's happening over with the ECB. And
Putting
what,
on her
Christine Lagarde
glasses.
did, in terms of their helicopter money for banks is actually going to be enough. We do want to go now to Christine Lagarde as she kicks off.
To our press conference. We will now report on the outcome of today's meeting of the Governing Council, which was also attended by the Commission Executive Vice President, Mr. Valdis Dombrovskis. The euro area is facing an economic contraction of
You guys hear
magnitude
okay?
and speed that are unprecedented in peacetime. Measures to contain the spread of the coronavirus, COVID-19, have largely halted economic activity in all the countries of the euro area and across the globe. Survey indicators for consumer and business sentiment have plunged, suggesting a sharp contraction in economic growth and a profound deterioration in labour market conditions. Given the high uncertainty surrounding the ultimate extent of the economic fallout, growth scenarios produced by ECB staff suggest that euro area GDP could fall by between 5 and 12% this year, depending crucially
I love
on
it.
the duration
It could be
of the
5, it
containment
could be
measures
12.
and
We
the
have
success
no
of
idea.
policies to mitigate the economic consequences for businesses and
Heck,
workers.
it could be 8.
As the containment measures are gradually lifted, these scenarios foresee a recovery in economic activity, although its speed and scale remain highly uncertain. Inflation has declined as a result of the sharp fall in oil prices and slightly lower HICP inflation, excluding energy and food. The decisive and targeted policy measures that we have taken since early March have provided crucial support to the euro area economy and especially to the sectors most exposed to the crisis. In particular, our measures are supporting liquidity conditions and helping to sustain the flow of credit to households and firms, especially small and medium-sized enterprises.
That
And
math
to
is good
maintain
enough for government
favourable
work,
financing
right?
conditions for all sectors
It could be
and
2,
jurisdictions.
it could be 12. Hundo.
We welcome the measures taken by euro area governments and the European institutions to ensure sufficient healthcare resources and to provide support to affected companies, workers and households. At the same time, continued and ambitious efforts are needed, notably through joint and coordinated policy action to guard against downside risks and to underpin the recovery. In line with our mandate, the Governing Council is determined to continue to support households
Stand
and
by
firms
your
in the face of the
mandate.
current economic disruption and heightened uncertainty in order to safeguard medium-term price stability. Accordingly, the Governing Council decided today to further ease the conditions
That's pretty good, Crypto.
on our
Print
targeted
it!
long-term
Print
refinancing
it!
operations, also known as TLTRO 3. Specifically, we decided to reduce the interest rate on TLTRO 3 operations during the period from June 20 to June 21st to 50 basis points below the average interest rate on the Eurosystem's main refinancing operations prevailing over the same period. Moreover, for counterparties whose eligible net lending reaches the lending performance threshold, the interest rate over the period from June 20 to June 21st will now be 50 basis points below the average deposit facility rate prevailing over the same period. We also decided on a new series of non-targeted pandemic emergency.
So notice that these
long-term
trades have been in for less than a week, but I'm up
PELTROs,
2% just on
to
interest.
support liquidity conditions in
What
the
if
euro
you
area
made
financial
2%
system
a week
and contribute to preserving
as a
the
fund
smooth
manager?
functioning of money markets by providing an effective liquidity backstop? The PELTROs consist of
Problem is it wouldn't
additional
compound, but what,
refinancing
still,
operations
what if you made 2% a
commencing
week
in
every
May
week?
2020 and maturing in a staggered sequence between July and September 2021, in line with the duration of
Yeah,
our
you would be on the
collateral
cover of Forbes.
easing measures. They
Bernie
will be carried
Madoff
out as fixed
promised people
at
1%
fixed
a
rate
month,
standard
and he collected
procedures
billions.
with full allotment, with an interest rate that is 25 basis points below the average rate on the main
problem is,
refinancing operation
It wouldn't
prevailing
compound.
over the life of each PELTRO. Further details on the amendments made to the terms of TLTRO 3 and on our new PELTROs will be published in dedicated press releases this afternoon at 3:30 Continental European Time. Since the end of March, we have been conducting purchases under
So like, for
our new
example,
pandemic
if you look at my
emergency
Euro ZAR
purchase
and my
program,
USD ZAR,
PEP,
that's
which
like
has an overall envelope of
$200.
750 billion euros to ease the overall
positions,
monetary
$200.
policy stance
it's only
and to
Thursday.
counter the severe risks to the monetary policy
Right?
transmission
We got 4.5,
mechanism
1.5,
outlook for
so
the
we got
euro
5%.
posed by the
So by tomorrow it'll be,
coronavirus
let's
pandemic.
say, 6%,
These purchases
or
will
$6
continue to be conducted in a flexible manner over
on
time
200, right? So that's actually
across
3% for
asset
the week.
classes and among jurisdictions.
$6 on a
We will
$200
conduct
investment
net
per week.
asset purchases under the PEP until the Governing Council judges
This
that the
USD Turkish lira
coronavirus
is
crisis
$2,000.
phase is over. But in any case, until the end of this year. Moreover, net purchases under our asset purchase program will continue at a monthly pace of 20 billion, together with the purchases under the additional 120 billion euros temporary envelope until the end of the year. We continue to expect monthly net asset purchases under the APP to run for as long as necessary to reinforce the accommodative impact of our policy rates and to end shortly before we start raising the key ECB interest rates. We also intend to continue reinvesting in full the principal payments from maturing securities purchased under the APP for an extended period of time, past the date when we start raising the key ECB interest rates, and in any case, for as long as necessary to maintain favourable liquidity conditions and an ample degree of monetary accommodation. In addition, we decided to keep the key ECB interest rates unchanged. We expect them to remain at their present or lower levels until we have seen the inflation outlook robustly converge to a level sufficiently close to, but below 2%, within our projection horizon, and such convergence has been consistently reflected in underlying inflation dynamics. Together with the substantial monetary policy stimulus already in place, these measures will support liquidity and funding conditions and help to preserve the smooth provision of credit to the real economy. At the same time, in the current rapidly evolving economic environment, the Governing Council remains fully committed to doing everything necessary within its mandate to support all citizens of the euro area through this extremely challenging time. This applies first and foremost to our role in ensuring that our monetary policy is transmitted to all parts of the economy and to all jurisdictions in the pursuit of our price stability mandate. We are therefore fully prepared to increase the size of the pandemic emergency purchase program and adjust its composition by as much as necessary and for as long as needed. In any case, the Governing Council stands ready to adjust all of its instruments as appropriate to ensure that inflation moves towards its aim in a sustained manner in line with its commitment to symmetry. Let me now explain our assessment in greater detail, starting with the economic analysis. The latest economic indicators and survey results covering the period since the coronavirus spread to the euro
Sharfungs
area
is something, holy smokes.
have shown an
which one are you talking
unprecedented
about?
decline, pointing to a significant contraction in euro area economic activity and to rapidly deteriorating labour markets. The coronavirus pandemic and the associated containment measures have severely affected the manufacturing and the service sectors, taking a toll on the productive capacity of the euro area economy and on domestic demand. In the first quarter of 2020, which was only partially affected by the spread of the coronavirus, euro area real GDP decreased by 3.8%, quarter on quarter, reflecting the impact of the lockdown measures in the final weeks of the quarter. The sharp downturn in economic activity in April suggests
This is
that
Christine
the impact is likely to
Lagarde,
be even more severe
former
in the second
finance
quarter.
minister for France, former
Looking
chief
beyond the
of the
immediate
International
disruption
Monetary
stemming from the
Fund,
coronavirus
and the current
pandemic,
chairperson of the
euro
European
area
Central
growth
Bank.
is expected to resume as the containment measures are gradually lifted, supported by favourable financing conditions, the euro area fiscal stance, and a resumption in global activity. Given the highly uncertain duration of the pandemic, the likely extent of and duration of the imminent recession and the subsequent recovery are difficult to predict. However, without preempting the forthcoming Eurosystem staff macroeconomic projections, which will be published in June, growth scenarios produced by ECB staff suggest that euro area GDP could fall by between 5% and 12% this year, followed by a recovery and normalization of growth in subsequent years. The extent of the contraction and the recovery will depend crucially on the duration and the success of the containment measures, how far supply capacity and domestic demand are permanently affected, and the success of policies in mitigating the adverse impact on incomes and employment. According to Eurostat flash estimate, euro area annual HICP inflation decreased from 0.7 in March to 0.4% in April, largely driven by lower energy price inflation, but also slightly lower HICP inflation, excluding energy and food. On the basis of the sharp decline in current and futures prices for oil, headline inflation is likely to decline considerably further over
right
the
on,
coming
Anthony.
months. The
Congratulations.
sharp downturn in economic activity is expected to lead
This is
to
where you do the
negative
super
effects
chat and you
on
buy me a
underlying
bottle of
inflation
wine.
over the coming months. However, the medium-term implications of the coronavirus pandemic for inflation are surrounded by high uncertainty, given that downward pressures linked to
$30
weaker
in the
demand
super chat, man.
may be
Buy me a
partially
wine.
offset
Buy me a
by
cigar.
upward pressures related to supply disruptions. Market-based indicators of longer-term inflation expectations have remained at depressed levels. Even though survey-based indicators of inflation expectations have
The
declined
Fed said, look,
over
we
the
did,
short and medium
we did
term,
an amazing amount already.
longer-term
There's no need to do any more at the
have
moment.
been
We
less
could do more,
affected.
but we're not going to, right? So that's all.
Turning to the monetary analysis, broad money growth increased
by the way,
to
guys, that super chat
7.5%
feature,
in March 2020 from
if I get you into a nice
5.5%
trade and you're
in February
appreciative,
2020.
like I said, buy me a wine, buy me a cigar.
Money growth reflects bank credit creation for the private sector, which is driven to a large extent by drawing on credit lines.
Yeah, Jim, and
low
I got knocked out of
opportunity
Euro
costs
Turkish
of
lira,
holding
and I'm
M3
still in the USD
relative
Turkish
to
lira.
other financial instruments,
A
while
lot less
heightened
good.
economic uncertainty appears to have triggered a shift towards monetary holdings. Likely
My favorite
for
is a
precautionary reasons.
Cohiba Bay Hike 56.
In this environment, the narrow monetary aggregate M1, encompassing the most liquid forms of money, continues to be the main contributor to broad money
I
growth.
have Monte Cristo in Yejos. I have Monte
Developments in
Cristo
loans
100
to the private
days.
sector have also been shaped by the impact of the coronavirus.
I have
The
the
annual growth rate
Aging
of loans
Room
to households
Quattro
stood at 3.4%
55.
in March 2020, after 3.7% in February, while the annual growth rate
Cubans are
of
great. Like I
loans
said, Bay Hike
to
56.
non-financial
It's my favorite.
corporations stood at 5.4% in March, after 3% in February. These developments are also clearly visible in the results of the euro area bank
Okay,
lending
so we're on
survey
tomorrow's
for the
sell
first
pivot.
quarter of 2020,
If you're a bear,
which indicate a surge in firms'
Tomorrow's
demand for loans and for drawing on
aggressive
credit
selling
lines
pivot,
to
but
meet
nonetheless,
liquidity
that's why I
needs
put
for
that
working
line there.
capital, while financing needs for fixed investment declined.
you see it?
Demand for loans
The
by
1705, I put a line there.
for house purchase increased
That's
less
tomorrow's.
than in previous quarter. Credit standards for loans
How do you say
to
it?
firms tightened
Behik?
slightly, while credit standards for loans to households tightened more strongly. In both cases, this was related to the deterioration in the economic outlook and a decline in the creditworthiness of firms and households. At the same time, banks expect an easing of credit standards for loans to firms in the second quarter of 2020.
I miss
Our policy measures,
Trichet.
in
Trichet
particular
was funny.
the more favorable
Behika,
terms for
okay.
TLTRO 3 operations and the collateral easing measures, should encourage banks to extend loans to
Behika.
all private sector entities. Together with the credit support measures adopted by national governments and European institutions, they support ongoing access to financing, including for those most affected by the ramifications of the coronavirus pandemic. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirmed that an ample degree of monetary accommodation is necessary for the robust convergence of inflation to levels that are below but close to 2% over the medium
Greenspan?
term. Regarding fiscal policy, an ambitious and coordinated fiscal stance is critical in view of the sharp contraction in the euro area economy. Measures taken should, as much as possible, be targeted and temporary in nature in response to the pandemic emergency. We welcome the endorsement by the European Council of the Eurogroup agreement on the 3 safety nets for workers, businesses and sovereigns, amounting to a package worth 540 billion euros. At the same time, the Governing Council urges further strong and timely efforts to prepare and support the recovery. In this regard, we welcome the European Council agreement to work towards establishing a recovery fund dedicated to dealing with this unprecedented crisis. We will very shortly take your questions. But before that, on behalf of the entire Eurosystem and all members of the ECB, I would like to acknowledge once more that this is a global health crisis and that the highest priority has to go to trying to save lives and prevent the spread of the disease. Since our last press conference on March the 12th, it's about 3 additional million people who have been infected by coronavirus, and a third of them in the euro area. And while it is heartening to see the curve of death flattening, as you've heard many times, we must remember that each death is a tragedy for those who stay, and we would like to express our sympathy and our condolences to all those who are suffering those deaths. And we would like to also express our gratitude, deep gratitude, to all those, from doctors to nurses to ambulance drivers, and all those who actually are on the front line of this fight against the virus, and who risk their life.
Oh, sure, Opus X.
As
I
I told
actually
you,
have a
those
very,
are
very, very
very
nice one in the humidor.
Strange and uncertain times, and it is in a way demonstrated by the absence of
Yeah.
Vice President de Guindos
They're
next to me.
spicier, though, which is fine.
Vice President de
Opus X,
Guindos
great.
is with us online.
The problem is
We
they
have been
typically don't have
operating
the sizes
in
that I
split
like.
teams, and
But I have
therefore we
a
do not
very
see
rare
each other.
Opus
We do
X.
not contact each other, and he is with us on the phone. If there are questions directed to him, he will be able to take them whenever it's convenient. But he's with us. With that, we're going to operate also in a strange way. The room is not like any room that we've had in our press
Backwards?
conferences
Never heard of
before. It's empty. So you are all online, and I know that
I like thicker
you are
cigars.
submitting questions, or you will be
56
submitting questions
and
in
above.
relation to the Governing Council that has just concluded.
56, 58.
Thank you very much.
I don't like 60. I like it
And
either
with that,
thicker than
we will
60 or a
start
little
with
bit less
the
than
first
60.
question going to Mr.
everyone does
Balazs
60 now.
Karani from Reuters.
Hello, good afternoon. Thanks for taking my question. First one is about the asset purchases.
Well, the sun-grown ones, Javier, are pretty strong.
The composition or the pace of the asset purchases.
You can go-
Most
you can
particularly,
go
I'm interested in
downhill.
whether you discussed
You can get sick on
including
those.
junk-rated debt in
They start out
APP.
beautifully, right?
The second question is about OMT and whether you see OMT as an appropriate tool in the current crisis for
You get that
for some of the
sun-grown
countries.
cabinet, and all of a sudden
do
you're like, oh my God, my head's spinning. I think I'm going to puke. What? You reached your free limit? Oh man. What? But COVID-19, I should get it for free. All right. Bloomberg says no more free publicity. All right, fine. No, thicker than that, Anthony. Yeah, I don't know what backwoods are, so I'm sorry. All right. Okay, so I'm just trying to show you why I drew that. There we go. That's why I drew this line here. So far, my line is holding. Look at that. I'm a bourbon guy now. So I went to my bourbon place, and this was on the way back from Nashville in January, and found out that the bourbon distillery that makes the bourbon I drink, they have 35 employees. I thought that was like amazingly small amount of employees. Yeah, after all, yeah, sure. Well, look at me. I'm Scottish. I'm half Scottish, half Irish. So yeah. So that means I drink too much and women are naturally attracted to me. It's a curse, really. All right, so let's do around the world. Let's do yens, I guess. Brad's got the same curse. Okay. Huh. Huh. There you go. That is exactly what we talked about yesterday. There you go. There you go, bears. There you go, eh? Said everyone gets the turn. You just have to be patient. And if you have that kind of discipline to be patient, you will be rewarded. How low will it slide? Ho. Cool. Don't believe it's fate. Look at that double top off 69.95. Amazing. Amazing. Yeah, I'm too tired to care about what Christine Lagarde's going to say next. Yeah, Daniel? Yeah. So they pump in $4 trillion, and the government pumps in $2 trillion. Market goes risk on. It's called a free money rally. Digging. That's right. She felt bad that she said we're not going to do anything. Then she gave us sympathy for those who are dying of COVID-19. So if you're on a ventilator right now, you say, well, look on the bright side. Christine Lagarde is sending you best wishes. Oh, where is it going? Okay, well, these are all pretty easy questions. Let's do this. I'll show you. Okay. Dig, if you will, the picture. This is going down to 64.25. Dig, if you will, the picture. If you are a bear. Now, you must break the back of bulls. Your first challenge will be at 69 and some change. The next challenge, and it will be a doozy, they will fight to the death around 67. Now let's go to the one that's probably really crushing it. So, okay, they're weekly pivots. So, what have you been doing on Euro Yen? Hang on, I got it set up incorrectly. Dig, if you will, the picture. You and I engaged in bliss. Okay, so these are step downs, huh? Can you, my darling? Riding the moving averages, just lovely, huh? Can you, my darling? Cool. So we're coming up to the 121.4. This is supposed to head down to 114.5, according to Leonardo Fibonacci. So on the Aussie yen, we talked about it in the live trading group last night for quite some time, like probably 20 minutes. And the idea was, if you're a bull, you buy the dip, you manage the risk, and don't be certain this is going to go through 70 without a challenge. In fact, you should be certain you will be challenged, and you should manage your risk. And you shouldn't be in this one trade. You probably should have been in the last 5 trades. And so, you know, entering right near 70 shouldn't be your first move into this trade. Then the second thing we talked about, and I wish we had the exact, this isn't the exact setup we had, but anyways, then we talked about the patience it requires and the discipline, where I said, look, for the last 2 or 3 weeks, maybe 4 weeks, bears have had very little opportunities to sell. And they had to have been very, very, very patient. But then we talked about that side. Now, if you're a bear, you're probably going to see a turn at 70. And if you do, you will have your opportunity and your patience will be rewarded. Okay? It's those that just enter trades that have problems. They're not looking at the bigger picture of things, right? So we had 70 as our big line. We knew that was the issue, and we knew, or we didn't know, we assume that there's a whole bunch of bears in here. Okay? So what we talked about last night is you don't know how many bears there are, and if there's enough bears to squeeze the bulls out. But there's a lot of reasons that bulls should be concerned and should probably take profit. So for example, Sunday night at 5 p.m. we were here and we said this is out of position, OOP. It should hit this pink zone probably around Tuesday and counter trend back down, okay? Because what we do know is this is an exit. That pink zone is an exit zone. So it makes a lot of sense if you're a bull not to be certain. Okay? And as a bear, you should be ready. So I said last night, I think we were around here, I said you should be ready as a bear. You should be ready. Finger on the trigger. If it turns, you will have opportunities. Now, it may be you take the trade today, or you just simply say, oh, well, I'll take the trade tomorrow. And if you do the trade tomorrow, you will have it set up like this. And you will sell it at $69.50. Okay? Right? And that, so I think it was Moshe that asked the question about the bullish side of this equation. And it was Maida waiting for the bearish side of the equation, right? So if you're Moshe now and you've been a bull all week or all month, now's the time to stop being a bull. Okay? So bulls had it set up this way. Once again, well, you know, I'll just change the template. Bulls had it set this way. Okay, and in fact, let me open this up. Let's get 7 on here. I got 7 on it. All right. Bump, bump. Okay, so what did bulls do the last 7 days? See if we can figure this out. Up, 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 down, down, buy. 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 Up, 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 up. They should have bought it last night. And now what do? Out. Okay. Okay. So bulls had all the last 7 days, they had it easy. But the point is, if you get good, you can say, all right, this area here is where the fun, if it's going to end, will end. What you don't know is if there's enough bears. So a bull could wait for the break, catch this pullback, and take it long that way. That's an option for a bull. The thing is, now for sure, a bull should take a walk and let the bears dance for a while. Okay? So there's a couple of things you need to do, guys, in this scenario. You have to figure out where we're going. Okay? Where are we going? Well, bulls on a monthly basis don't want to buy this until we're at 68. Okay? Could go all the way down to 67. So bears get a hall pass here, and they're going to pick up 200 pips. Okay? That'll probably take a week, don't you think? So now you drop into the weekly and confirm that. You got to go to next week, not this week. So that means 69 down. Yep, see, lines up perfectly. See, down to 68. So the monthlies say down to 68, and then bulls will have an opportunity to enter. So the monthly says maybe down and up. Okay? But what does pivot point theory teach you? Down to this area. So the weekly and the monthly have congruency around 68. So what'll probably happen over the next couple of days is there'll be a down, there'll be an up, and then there'll be a down. And then we'll have to reevaluate because now we're in bullish territory. As you can probably see, there's a whole lot of bulls that want back onto the dance floor. But not for 200 pips. Okay. So the question here is now, what about Aussie Swissy? This has nothing to do with Aussie. So if it happens, it'll be because of the Swiss franc's relationship with the Japanese yen. It has nothing to do with Aussie. Oh, red on Hope. So Hope squeezed it. Like I said, guys, don't be shy. You can buy me a cigar or a bottle of wine. That's what Super Chat is. You're like, that was awesome, Wayne. Boom! Have I done oil? No. Oil. Yeah, so anyways, this is coming down. Look, it's just riding the moving averages. Easy peasy. Have I thought about making a Discord? Nope, never thought about it. Nope. Hello, hello. Nothing's free, CAD to crypto. Nothing's free. Money for nothing. So anyways, there's that. Look at this central pivot. No change. Amazing. Amazing, actually. Hey, thanks, Ron. Yeah, boy. RJ. Mr. Nabisco, thank you very much. So it doesn't let me like configure anything. Do you choose the $5 or does it say donate $2 or donate $5? Like, does it give you a choice? Is there a way to customize what you do? I'm not sure how. So, like, I don't, right? It's not something I've ever done before. I'll have to look into that. Yeah, that's what I was saying. That's called super chat. But $5 doesn't buy me a cigar or a bottle of wine, so I'm not sure how to change that. But yeah, but right. CAD to crypto is so funny. Well, if it's free, I'll join it. Oh, I still don't know what a backwoods is, but anyways, that's funny. No, that's funny. Yeah, well, 500 would be too much. I have to look at it. I don't know how that works. But it should be more like 25, let's say. But anyways, cool. So there's the kitty CAD. So now let's look at that relative to oil, WTI. And earlier in the week, on Sunday, we said it would come down, it would get trapped in here, and then go up, which it did. Very cool. So what does this leave for us? We could probably use another dip to, what is this, 11? So let's go into a smaller time frame, or at least zoom in a little bit. So what do we know? Oh, that's funny, Meta. And the cool dancing thing, that's funny. So you chose the cool dancing thing? That's pretty funny. Money for nothing. So I'm hoping like these things tell YouTube the community is active and then promotes. I wonder how much YouTube gets out of it. What's their take? All right. So first thought is it's not quite down enough. So let's do the second one, and that gets us to here, which seems pretty decent. So it kind of feels like down to around 11-ish, and then up. Is that right, Nature? They take 50%? Nature bound? Really? Holy smokes, that's a lot. Oh, you want to do a rising, right? Yeah, to Claire, yeah, the midget porn, but not gay midget porn. And thank you, Jim, for deleting that. Yeah, just get rid of Claire. All right. So that's what I would think about oil if I'm a bull. If I'm a bear, I have to wait. Yeah, someone named Claire came in and asked if I like gay midget porn, and I'm like, I like midget porn, but not gay midget porn. I mean, it happened to me one time. I was watching midget porn, and I'm like, oh my God, is it gay midget porn? So I click back. You know, sometimes you can't tell. They all start out the same, right? Yeah. No offense to gay midgets. Hey, I didn't call them midgets. The Claire Fraser, who we blocked and now booted out of the community, said midgets. So I was just responding to what they were saying. All right. Funny like a clown? Funny how? So anyways. Sorry, it's 30%. That's amazing. That's a lot. Why would they deserve it? Because they didn't do anything. Why would they get anything except a transaction fee? How funny is that? Yeah, it's amazing, huh? Anyway, so that's what I'm looking at. And so you could either trade that or you could trade this. But it feels like it needs some up before the next down. So you can see I had this highlighted earlier to just represent the risk here. So if you're a bull, I think this could go as high as 40. This could go up another 125 pips and then come down. So to fulfill this destiny, it could do this first. It's the same thing. Okay. I think it was 11 and a half, Joe Dirt. Do I take supplements? I'm jacked up on vitamin B all the time. Vitamin B is brain food because it helps you carry more oxygen in your blood. Why do pivots work? Well, you have to look at the math. Okay? You have to look at the math. So you got your high. Let me get this a little thinner. Okay, delete. You got to look at the high plus the low plus the close, which makes a weighted average, divided by 3. So now you got a weighted average. In this case, it's the same. It's probably a bad example because of that. Usually the central pivot moves. Right now the sentiment on this is neutral. But anyways, so you got the high plus low plus close divided by 3 gets you a weighted average. Okay? Then you look at one standard deviation from the weighted mean average. Okay? Above. And then one negative standard deviation from the weighted moving average. Okay? And then you do two negative standard deviations from the weighted moving average. Then you do two standard deviations from the weighted moving average above, okay? And then you do an extra step and you say, you look at the distance between the standard deviations and divide that by 2 and you get a midpoint. And then you do a standard the distance between the two standard deviations and create a midpoint. The distance between the two standard deviations and a midpoint, so on and so forth. And what you end up with is a central pivot point, S1, S2, R1, R2, M1, M2, M3, M4. Okay? Now you have your pivot points. So why are they important? Why do they seem to overlap with a lot of things? It has to do with the standard deviation from the mean. It's in the mathematics. So the standard deviation from the mean is looking at the past. Okay? So I have to back out a little bit. Okay? So looking at the previous month, okay, it's these pivots here, okay, not the ones on the right. Let's do it this way. Okay, we're not looking here. Let me delete the future. Okay. By the way, can you do this with your MT4? Okay. Cool. So now this month was based on last month. Okay? So this looks at last month's high. Ah, son of a... Let's do it in sort of bluish, I guess. Okay, to do the first calculation, you look at the high of last month and let's say the low of last month and the close of last month, which was about here. Okay, and you create the central pivot point. Okay, and then what? One standard deviation below the mean, so the mean is about here, and this is one standard deviation above the mean. Okay, and then you take the distance from here to here, divide that in half. It's actually add this number, and divide by 2, but you get this, which is an M2. And then you take the distance from here, add this price to this price, divide it by 2, and you get M3. One standard deviation below we call S1. One standard deviation above we call R1. Do you understand that? So yeah, you'll have to do the statistics, right? So I took a course at Harvard on statistics, and it was great because you ended up being able to calculate things like regression studies and means and standard deviations and stuff. So it's all in the math. So someone was asking, are they simply a self-fulfilling prophecy? Well, first of all technical analysis is self-fulfilling prophecy. But if you look at the math, it's not magic, it's mathematics. and you're just simply doing you're doing a weighted mean average, calculating the standard deviation from the mean, and then calculating the midpoints between the two standard deviations. Simple statistical analysis. Okay? If it's a little complicated, you have two choices. You can go to Harvard. I'll recommend the class. My professor was super nerdy. Perfect. It was funny because as he did his lectures, he would catch his breath because he was so nervous speaking in front of a group. And it made me nervous because he was always out of breath. And I'm like, oh my God. So anyways, but it was a good class. And it really helped me understand a lot of my indicators, which is really great. Or you can hang with me and I'll just give you a Harvard education myself. Easy, right? So hopefully that was helpful. Well, if you can't get in, I'll have to teach you myself then. Oh, my pleasure. Get to crypto. There you go. Get to crypto loves free, right? Free Harvard education. Just show up every morning. That's awesome. Yeah, it wasn't free for me. That's faux show. So, anyways, that's okay. That's a quickie there. Quick statistical analysis of the foreign exchange market. So the funny thing is about standard deviation is they're not relative, right? So there's a standard deviation we can see from here to here to here. But percentage-wise, the standard deviation from here to here to here, and then throwing in the weighted, okay? It ends up to be about the same, just the magnitude is different. Okay? Okay? Only the magnitude is different. So if you want a different method of doing the same thing, you can do this. Because now, see, pivot points don't calculate slope. So y equals mx plus b. Okay? So m is the slope. So m equals rise over run. Okay? And b is the intercept. So you have to look at, in this case, how far down does price deviate from the mean over a period. Okay? Well, I guess it's looking the other way, isn't it? Oops. Let's put that back. Okay. So to do this, it's, yeah, it's the fall. Wait, rise over. Which way is it doing it? Rise over run. It's doing it this way. Anyways, so it's looking at how far does it fall over time from the mean. Okay. So you can calculate the rise over the run, which gives you a slope, and m equals the slope. So then you get a number here. How many x, right? And the intercept, okay, and there, and you calculate this, and it gets you here. And then part of the next part of the question is if this is the mean, how far does price tend to go before it reverts back to the mean, and which we call standard deviation from the mean. So the standard deviation below the mean is here, which makes the standard deviation projected of the mean here, and you get this sloping channel. Okay? So now you can project when you're up here, like here, or like below, like here or here, typically it goes back to the mean. Okay? So we're here, it says now there's a pretty good chance we'll go back to the mean. Okay? And if you're bearish, you will try that. If you're bullish, you're trying for this. Does that make sense? What does this have to do with trading? I just described how to measure trend and have projections on how far the direction of the trend goes. Actually, Wuhan, my son in 7th grade does this. So this is something that you should have before high school. So this is not fancy Harvard stuff. This is 6th and 7th grade math. Okay? So what I'm trying to tell you is a lot of people are like, hey man, what direction are things going? I'm like, well, if you just look at the direction the market is going by using the proper tools, for example. So like, let's just pick a random other chart. Okay, nat gas. So you can do a study. So going back to March 6th, the beginning of March, what's the trend in nat gas? Sideways. Done. And you can see there's just slightly downward sloping, but generally sideways. Cool. So what's the trend? Market's neutral. Okay. Looking at CAD yen. Different time frames. Since the middle of April, what's the trend been in CAD yen? See, I'm not drawing the slope. All we're doing is we're looking at this, basically a scatter plot of prices. Okay, watch. So I will put my indicator here. So what I grabbed is the regression channel, linear regression. So I'm teaching you linear regression. And more importantly, I'm trying to teach you the math behind a linear regression. Okay? So all I'm doing now is I'm dragging this from left to right. I'm not drawing the slope. The math is doing the slope. So I grab here and I say from this period, measure the scatter plot of prices. These could just be different prices at different moments in time. I drag it and I say calculate the mean and the standard deviation from the mean. And it's doing, first of all, it has to find the slope, rise over run. And notice I'm dragging left to right. Now, do you see the two blue vertical lines? That's showing us the prices we're measuring and the change of prices over that period. And I'm going just left to right. My mouse is still at the top. And it's telling you this is sloping down, rise over run. And the upper channel is one standard deviation above the mean. And the lower channel is one standard deviation below the mean. And it's saying right now, currently, this is a downtrend. Right? But this is 7th grade math. Okay? Now, what does this have to do with trading? I thought it was very helpful to understand the indicators more and be able to do these calculations by hand. Cool. right? But now you can get a good T-bone by sticking your head up a bull's ass, but I think I'll take the butcher's word for it. Does anyone know what I'm quoting? Holy shnikes. Tommy Boy. Yeah, Tommy Boy. Yeah, Coach Jimmy got it. Son of a... Yeah, you guys are good with the the movie. Yeah. In fact, my son said the other day, he's like, "Oh, I'm tired. I want to watch a stupid movie." I'm like, "Oh, I know a stupid movie. I know a stupid movie." Just like right off the bat. So anyway, so I played him Tommy Boy. So anyways, yeah, I'm tired. You can see, I think my eyes are actually watering right now. Cool. Is there any last questions that you want to cover? I'm happy to do some more. Pound dollar? Okay, I'm happy to do that. Where do I want to, though, is the next question. I guess we'll do here. Thank you, Kat. Okay. All right, let's do the pig dog. Big dog. So let's do a regression study. Apparently, we're more bullish than bearish. How do we calculate the trend, guys? How do we calculate the trend here? Rise over run. Okay. All right. So here we go. So currently, if you are a bull, you are a buyer around 124.80-ish to 124.50-ish. We're still looking at today. We're still developing, tomorrow's buy zone. But this looks like a place here that could act as support. So in this case, you're probably looking at this. Okay. What do you stink? So one thing you might notice is on this chart, I have linear regressions automatically drawn. So looking at a high time frame, you can see there's a mean and a deviation already printed out. So this is telling me on the higher time frame, this is slowly climbing up. And why did price reverse right here? Well, that is the mean. That's the average. Cool, interesting, right? So a bear would be interested in a move like this. Okay, so you have to know if you're a bull or a bear. A bull is enjoying the move like this, and their intent is to eventually get it to the deviation above the mean, the standard deviation above the mean. The mean being the average price over time. Okay? So we're kind of at fair market value in a slightly bullish market. You see that? Now, on smaller time frames, you can also see this. And so even though there's been a big trend over time, more recently it's been consolidating. Okay, so a bull might try to do this, and if so, they'll get above the average price over time, in which now the market would become much more bullish. So if you're using regression studies, this whole time we've been more bearish than bullish, even though price has been going up. Okay? And this is much more bullish up here because your prices are above the average, and because of the slope, you are climbing up, and you're, right? So the interesting thing is when you do economics, this would be your business cycle. And this would be, there's different ways of labeling it. What is this, K or something? But basically, this is potential GDP. Okay? And then what you're looking for in the business cycle is where is growth compared to the potential GDP. Okay? And there are times in the economy when you're growing above potential, and that's when inflation rises, and therefore the Fed is probably raising interest rates. And there are times when you're below potential and the economy is not doing well, and the Fed is cutting interest rates. And what they're trying to do is get the economy back to potential GDP and rising a bit. That's cool. That's better than anything. But they don't want to get way up here because everything gets too expensive, because they'll have to raise interest rates so high that businesses can't make money. So for example, you're a shoe store. Okay? What are your costs? Rent, employees, insurance, marketing, and what else? You have to buy shoes. Okay? And when you account for all of this, your profit margin is 5%. Okay? 95% of your revenue goes to covering this. Okay? 30% of your revenue just covers your employees. Okay? But you got to buy inventory, right? That costs money. But the thing is, if you go to a bank, will they let you borrow? Oh, let me put this back actually. If you go to a bank and take out a loan, will they let you throw it at advertising? No. Will they let you throw it at rent? No. Will they let you pay your employees with your loan? No. What about insurance? No, that has to come from cash flow. So you go to the bank and they're like, you say to the bank, I need to borrow $2 million. Okay? And the bank says, well, do you have any collateral? And you're like, well, we're buying inventory. So you give me $2 million, suddenly I got $4 million worth of shoes. You understand it? $4 million retail of shoes. And so you will sell the shoes and pay for the marketing, pay for the rent, pay for the employees, pay the insurance, pay the bank back, and whatever. And 95% of all your revenue covers all these expenses, and the company has 5% profits. So, what happens then, guys, if we are above potential GDP and the Fed is raising interest rates? What happens to your cost of loan? Because you always, every few months, you need, maybe every month, you need to take out a new loan. Take out a new loan. You're always borrowing because you need the cash flow. You need to borrow money to pay for shoes, to sell, to pay your rent, to pay your employees, and then you pay back the loan. So if you're above GDP and inflation is kicking in and the Fed has to raise interest rates to accommodate for all of that, what happens is now you only make 4% or 3% because your cost of borrowing has gone up. Okay? So what happens if the Fed raises interest rates to 6%? Are you going to jack up prices? Well, it's a very competitive market. There's lots of shoe stores. If you raise your prices even a little bit, people will just go somewhere else. So what happens? Well, your CEO issues a quarterly report and says, okay, sales are up. This is the CEO of your franchise now talking on CNBC. And he says, well, sales are up 8% this quarter. We're selling shoes like crazy. Inventory turnover is 3.1. It's crazy. We're selling shoes like crazy. And then the reporter says, oh, what about your profit margins? And the CEO says, well, nothing. We make 0. Because our employees are also asking for more money because of the inflation. And our rent is going up. Marketing costs are getting more expensive. Insurance are going up. And the cost of borrowing shoes go up. So we're not actually making any money, but we're not laying anybody off. So what do you think happens 3 months later? The CEO does the same CNBC interview and reports for the second quarter in a row, they're not actually profitable. What do you think happens? Okay? No, not necessarily. They might have a pile of cash somewhere, but they're not profitable month over month. What happens to the stock price, guys? Stock goes down. And what you'll see is this is a systemic situation because it's impacting the entire economy. And the bullish economy, what happens to it? when more and more companies are saying the cost of borrowing costs are eating their profits? Well, you have potential GDP. Okay. I think I labeled it P star GDP. Okay. And it would be in a scenario like this where everyone was making money, everyone was buying shoes, inventory turnover was high, earnings per share was high, but then when you'd look at profits is low, after 2 quarters of that, the overall stock market drops again. We get back to potential GDP, interest rates come down, and the market normalizes. And somewhere the Fed kind of just wants it trickling around up here ideally. And that's what creates a business cycle. And this is where you say, what's that guy that claims he's a genius now? The hedge fund guy. What was that guy's name? I'm a genius. I'm a genius. Anyways, that's how economics works. So you have these cycles of where money's cheap, money's expensive, money's cheap. Oh, Ray Dalio. Yeah. So, yeah. That's how it works, guys. So right now, we had GDP without inflation, and now we've kind of turned this way, right? But like I said, when the stock market crashed in March, the only people that lost money were the people that bought Apple in the last 2 years. And if you're willing to buy Apple computers at 27 times earnings, which means you're lending them money, not really, but logically it's like lending them money and expecting to get it back in 27 years. You're like, well, that's stupid. So yeah, if you put money into overpriced stocks over the last 2 years, you got creamed. But that was a dumb idea to begin with. The people that bought Apple 12 years ago made money. They didn't lose money in March. Okay? And so these cycles are there for a reason. The people that know make money. The people that guess lose money. And that's how it works. Well, I didn't say anything about shorting Apple, but I'm just like, you should have a price. Like I said, you should have a price for everything. Actually, do you guys remember like 2 years ago, I said, write down on a piece of paper the 10 companies you want to own if it dropped 10%. 10 to 20%, right? That's how you do it. So it goes, and then everyone buys it back. And then it goes, and then people buy it back. But you paid here, and now it's up here. Now you can move your stop and lock that in. And oh, that's how you trade. Yeah, that's also how you invest. You buy low, and you never sell. So I bought Apple at $6 a share. Yep. You bought Bank of America 2 weeks ago? Interesting. Yeah, I bought it at $5 a share. Cool. All right, guys, I'm tired. It's been a long week. I got my live trading group this evening at 5 p.m. We're going to do our group work. So if you're in my live trading group, make sure you study your charts and you're looking at what you think is going to happen in May. Are you a bull? Are you a bear? Find a particular chart on a particular currency pair and predict the future. And then show up to the meeting, and I'm going to put you guys in groups, and you guys share your opinion in the group. Try to come up with a great trading idea as a group, and then one leader from your group will do a presentation in front of everybody on what you think is going to happen in May, why, how, where to enter, and where to exit. That's what we're going to do tonight. There'll probably be 7 groups again, right? So 7 groups of 6 people maybe. Okay. If you, email me, Sammy, wayne@fxbootcamp.com. Cool. And I love Thursdays. I love the group work. I think it's fantastic. Sam, I can't help you with that. Watch the video, hire somebody on Fiverr, or wait, because probably within a week, I'm launching a new installer program that will install everything for you automatically. Okay? But you'll still have to be sophisticated enough to tell the installer which MT4 or which MT5 you're installing to, because you might have more than one. So it'll look in your, let's say MT4 goes into the program files x86 folder. So you will have to be sophisticated enough to say, in that folder, you should put it into Trader's Way MetaTrader 4 folder. You have to be able to select that. And if you did that, it will do everything for you. Okay? But a different broker will have it somewhere else. MT5 is somewhere else, so you have to use the right installer, all that kind of stuff. But it should be simple. Okay? So, Sam, if you are installing a template, but it's coming up blank, it means you don't have the indicators installed. Okay? But I'm working on it, guys. I'm working on it. I've spent hours and hours and hours. I've already spent hundreds of dollars, and we'll put all of that together and make it easier for you to install the $5 product. So think of it. I've spent a lot of time and a lot of money. So hang on. I'm helping. You just got to be patient. All right. So peace on earth. May the pips be with you. May your profits be above average. Thank you for being a member of the Forex.Today community. If you like learning from a book, the link to my book is below. If you like learning from videos, they're 80% off right now. And by the way, that deal is ending probably either this Monday or the following Monday. I haven't decided yet. So basically, that deal is ending very, very, very soon. So the link is below. And what? The live trading group link is below. What else? Link to Trader's Way is below. Maybe visit youtube.com/FXBootcamp and subscribe there as well. That would be appreciated. There's tons and tons and tons of resources to help you become a successful Forex trader. Find the mode that works for you. Some people like reading. Some people like listening. Whatever works for you, something's been developed to help. Thanks. See you at 5.